Oh, shoot, I already
Oh,
did.
never mind. Oh well. A is being recorded, heads up. I was just going to check how you want to do Q&A, but we can figure that out as we go along.
Okay.
Hi, everyone.
Hello, everyone. Nice to have everyone here. Thanks, Julia, and everyone who puts a lot of work into the cohort for their contributions and everything. And I hope you guys are having a good experience so far. So I'm Farouk. I'm one of the co-founders of Diversity VC, and I'm a GP, sole GP, based in the US. Been investing for about 15 years, first 10-ish years at different institutional funds, both in the United States and in Europe. And then fast forward, just after, wound up launching my own fund called Preface Ventures, where we do $250K to $1 million checks in enterprise infrastructure companies. Typically, that's in enterprise like cybersecurity, ML applications, financial inclusion, and healthcare access. So anyway, Farouk at prefaceventures.com if you guys have any questions, or I know we'll have a Q&A session here, so we can get started. Does that sound good, Julia?
That all sounds great. I think people are still jumping on. Ooh, I put my video off because there was noise. Yeah, I think that all sounds good. Normally I do a bit of admin here, but I don't think we have any admin to report today. So
okay,
let's just jump straight in.
Cool, sounds good. So the topic at hand is how to support portfolio, and it's really, really important. It's very, very important. So, oh man, where do we start? So helping. I mean, how you choose to help your portfolio companies and your founders actually starts with your fund strategy. So I like to think of fund strategy as like an analogous to religion in some ways. Like you could be Christian, Jewish, Muslim, atheist, whatever. As long as you're a good person, you're a good person. And same with investment strategy. You can invest in 50 companies a year. You can invest in 100 companies a year. You can invest in 5. You can be a lead. You can be a follower. You can be an angel. It's kind of like the whole gambit. And look, so I'll kind of speak from my perspective. So for Preface, it's a $25 million fund. We invest in 6-ish companies a year, and are often the second largest check writers in the company, if not the first, which is good. So sort of seed, pre-seed, pre-A. And how you help portfolio companies actually starts in fundraising. So there comes to a point where, okay, you go and like you do, you're doing your due diligence and you're talking to founders. And at some point you feel pretty strong that you want to lean forward and you want to invest in the company. And that's good. It's good to believe. It's good to kind of get to a decision and to be actionable, which is a good thing. And then eventually you start to do like hopefully. I recommend this for kind of everyone to do references and fund references. And so when I do fund references, I usually do, and sometimes I'll even do it on just sort of the whole exec team. You'll actually learn and determine. So depending on the kind of questions that you ask, you can ask him or her or they, like what is X person or Y founder like when they're stressed or when they're angry or when they're upset, and just generally how to sort of support them. And then that's kind of where it even starts. It's like, okay, cool. This is a new relationship. I'm investing in someone or some team, and I want to get to know them as soon as possible and in the most efficient way as possible. And a good way to do it, kind of, 2 birds, 1 stone sort of thing. You get to make a better investment decision because obviously, references can unearth a lot of things, positive and negative. But I think the more interesting stuff is understanding like, what these people are like and what kind of support they need. And you can even be really specific. You can ask like, hey, like, what kind of skills and capabilities, not just sort of soft skills, or like how like for example I was mentioning earlier, like what are they like when they're stressed, that kind of thing. And at that point you're sort of putting together like a profile in your head. I'm like, okay, cool, sounds good. I now know that they are like this when they're upset or stressed, or they need some kind of operations type person alongside them. And then you're already starting about recruiting, and recruiting is huge. So anyway, we'll put recruiting aside for a little bit later in the conversation. So once you make the decision that you are going to invest, you might actually be the first check or second check, or maybe the round hasn't even come together. syndicate construction is really important, right? So who are you co-investing with, and what is the most healthy syndicate for people to sort of co-invest alongside you? So in those references, you might have determined or learned that this person needs help on, engineering management or product marketing management or whatever this sort of like esoteric need is to get the best out of the team. Because once you invest, like you're with them till the end, right? Hopefully. And so you have to think through what are the angel investors, also like which firm, but also which partner at the firm that you might be co-investing with, because oftentimes, these are rounds with multiple parties and players. And you have to give guidance on to the founder on like or founders, like which what's the best mix, pros, cons, back channeling. Let's say the founder really wants to work with X partner and X firm. You should like call them or email or text them and say, hey, like, what do you really think? Like, I'm really excited for these reasons, and sort of get people over the line and have them, push towards action, which is important. Secondarily, like even when you kind of commit to invest, I mean, there's a plan, right? The founder or founders have a plan. Like, hey, we have, $3 million that we want to raise. This is going to get us to this milestone. Let's say it's like, 3 pilots, 1 paying customer, a pipeline of $3 or $4 million, and hire this like important function. But again, let's put recruiting aside for a second. You actually have to stress test. So you have to like review the like financial model, and you have to review the forecast, and honestly just give a sanity check. A lot of times, I mean, the founders know the business way more than you do, but you have to like provide that like a safe space for people for them to ask questions to you about like core components of the business. And so in the situation right now, we're talking about like runway. Like what is the burn? What is the optimal burn? Like how comfortable are we to decay our unit economics, make them worse, to optimize for growth? When the money is spent 18 or 20 months or 22, 24 months later, or 10 months later, whatever it is, can all of us, as like, part of the same team, stand on strong footing and say like, hey, we've accomplished things that we wanted. And yeah, there's like 10 things that people want to accomplish when they're financing. And that what I've observed founders, what they say is they say like, oh, we want to be at 1 million ARR, or we want to be at like, 1,000 customers and growing 10% a month. Those are really like, they're important metrics, but they're kind of vanity metrics. And fundamentally what you're thinking about is how are the important components de-risked, where a next financier, so let's say a Series A firm in my situation, feels comfortable like putting more fuel in the fire. So yeah, that's an important one. And then yeah, like once you have all these inputs, and again, we haven't even closed the financing yet. We're still sort of thinking through what the plan is. And then around kind of fundraising and fundraising supports, it's actually, sorry, one second. When you think about kind of like fundraising and fundraising support, there's also subsequent financings, which I think is worth talking about. So let's say, in the future, we invest in, Julia Inc. And Julia Inc.'s company is going fantastic and great. Like, how do I help Julia sort through the noise and leverage, a GP, a venture capitalist experience and relationships, and saying like, don't work with that firm. That's too much money. That term sheet is garbage. That's too extreme. Why are they asking for that? Like, also, not even to be so didactic in a way. You could even sort of say like, Julia of Julia Inc. Like, what does Julia want? Like, what matters to you? Like, who did you like the most that you spoke to, and be able to kind of stage that well. So we can get to that. I could kind of skipped ahead. Let's go back. Let's say that we're, Julia Inc. is raising that $3 million financing. There's like a lead investor. Let's say that I'm the lead investor in her company. What matters actually is a review of like the documentation and a review of like KPIs and metrics. Like, you have to go into like her dashboard and actually have like a shared view that like these are the important metrics that matter, and that you're kind of speaking the same language. And you support that portfolio founder. You support Julia in her initiatives. Secondly, when like the docs are being put together, like, should there be a board? Okay, cool. Like, I'll be on the board as a lead investor. Do we need a non-exec director? Um, like, like, and what's interesting, like supporting even the nomenclature, supporting portfolio founders, one can kind of make a belief that it's like, okay, you have to be like pro founder all the time and like and forever, near term, short term, etc. You'll have conflicts even too. So like what is portfolio versus founder support? Like an interesting example is founder vesting. So I'm not sure if you guys are aware, but like once you invest in a team, you know, you actually want to have the founders' shares vest after and have them earn their equity over time because you want them to stick around. And you want them to stick around because the company performs better. And then the rest of the management team and the rest of the company, maybe Julia Inc. has a 40-person organization right now. And for some reason, Julia is not with the company. Like you want to create incentives for her to sort of stick around and stay. So it's not exactly like it's a negative component for a portfolio founder, but it's actually positive in the long term of the company, and in turn her as well. So back to board. So putting the board together, that's critical and important. Thinking about even like how big the option pool should be. Sort of going back to recruiting again. Does Julia, based on like the founder references and the conversations that we had with people she has worked with before, does she need like 3 key hires? Does she need two key hires? Does she need 1 key hire? Okay, cool. Like, what does that equate to? That's a 10% option pool. Okay, that's a 12% option pool. So that goes into that. Also, having guardrails in the term sheet for Julia. So I'm just using you as an example so much. It's just easier to say founders or founder, that kind of thing. Having guardrails for big expenses. So if Julia wants to spend 500 grand or take on a big debt line or do things that maybe like she might believe is in the best interest of the business, it's a good thing for her to have guardrails for it. And so we'll negotiate those kinds of terms in the term sheet, for example. Also, like this is more of the on the negative side, but like hiring and firing management. So like what happens if Julia's co-founder is not performing or does some bad stuff or whatever? Like the board needs to have it in their wherewithal to let someone go and to do it in hopefully an ethical and honorable way always. But like that's also supporting portfolio and also hiring. So typically at board meetings, you do an option grants approval for new hires and new people. And so like, how does that work? Now I gave the example of like a lead investor, which preface is sort of maybe like half the time. For us, we actually, for the engineers in the room, we have an SLA, like a service level agreement for introducing 4 customer prospects in the first 12 months that we work together, and introduce 2 2 candidates for a key critical hire that would be like game changing for the business. So let's say if maybe Julia wanted to, and she had a company that was around like open source, like maybe getting a developer evangelist from GitHub, for example, which would be like really critical and amazing and game changing. And so what we do is we will actually, it's funny, Julia and our experience of sort of working together, even in the first few months, I'll have to get up to speed and be able to sort of say her company just as succinctly, just as amazing, and pitch it to people I know who are CIOs and CTOs of public companies and convince them to have a conversation with her. And it's tough, attention, competition for attention is so crazy in life. I mean, on so many levels. And so that's key and that's critical. And the way that Julia will empower me to do those sort of things. So look, is it a conversation we have, every month for 20 minutes? Is it like a text thread of hundreds? Is it, is it investor letters, like quarterly letters or monthly letters where she writes and gives updates, lowlights, where I could just be like, like I exactly know the person and the organization and exactly how to pitch Julia startup to commercial buyers to help all of us together. Actually, on the note of quarterly letters, what's nice, or monthly letters, or any kind of investor relations that you have with your founders, oftentimes good founders that I know will actually have like a help section. They'll say, hey, can you introduce, does anyone know Y person, Z person at this organization? Does anyone know like an unbelievable UX designer? Does anyone know someone who can like help us with our pitch deck and make it prettier, or whatever it is? Like, you have to help. And what's nice, some of the smarter founders, I know what they do. They actually say thank you in subsequent letters. They'll say, oh, thank you, Farouk, for the wonderful introduction to so-and-so, to motivate other people in the syndicate to like get up to snuff and get up to speed. Yeah. So that's yeah, and that there's no one way of doing it. And it's funny. This is what I was describing, like syndicate health. So I might be really well suited for commercial and customer introductions, but maybe another person in the syndicate who invested alongside me, maybe who I even introduced, needs to help Julia and her co-founder on technical supports and architecture, or like more sort of product and engineering related decisions, which I can have some opinion on and a good point of view. But it's always about disassociating your who you are and and your ego from. This is why venture is really funny. From like whatever the company needs. I mean, there's so many funny blog posts about like, oh, like I met Julia and it was raining on a Tuesday and I exactly knew like what she was, I exactly knew like what company she was going to build and how big it was going to be. And that was her first call every single time. That actually that can be true in some cases, but more often than not, like it takes a village. It takes a village. It takes a village. You need to have people around the table to support the founder or founders in several ways. So let's go a little bit more fast forward. So fast forward, let's talk about like M&A and IPO. So the relationship kind of continues right over years and years and years. So between exits, there are subsequent financing events in which you introduce other investors. Again, as I mentioned before, you back channel, you do all these sort of things. But there are going to be times and opportunities where your portfolio company, maybe they want to buy a company, maybe they want to, maybe they have an opportunity to be acquired. So I'll give you an example. There's a company I invested in as a first check, and they had an opportunity to take a $20 million round at 100 million post from Bessemer, or kind of get like, there was early conversations of getting, and they thought a little bit of cash in the bank, or to get acquired. Like there's a large public company who wanted to buy them. And then Varun, who is the CEO, called me and said, like, Farouk, what should I do? And I said, like, hey, like, do you still believe in the market opportunity? Is the thesis still strong? If you use more cash, do you think you can, get acquired or go public for a lot more money? He goes, yeah, definitely. But, I'm in a situation in my personal life where this would be really like life-changing for me, and I don't need to deal with the dilution, and like, I'll be able to start another company again. Like, this is a great idea, but I'll have another idea in the future. And we went in pros and cons and pros and cons. And then, and even me, what I offered, and this isn't about like, this isn't being like pro Farouk or pro Preface, but a way of supporting a founder, and then maybe even less so a portfolio actually. So it's about near term versus long term. Varun actually said like, hey, like the dilution that Bessemer wants to give if I take this offer is too high. And what I told him, I said like, look, I'll sell some secondaries for you. Like I will sell some of my shares to make you happy and to make sure you have more ownership for a longer period of time. And he's like, oh my God, you would do that? I'm like, yeah, obviously I believe in you until the end. But if it's the difference between you being like really uncomfortable taking this financing versus getting acquired, and it's a big variable for you, I'll help you. And the reason people do this, and the reason that I do this, is that like I want to backing a second company. And actually, fun fact, Varun wound up getting his company acquired for $250 million, and he became one of my largest LPs. it's cool. It's cool how that kind of works. And so there's all these different sort of competing like incentives and stuff, but like you just have to always try to optimize for the greatest sort of long-term outcome, because funds themselves are you know, they're at least 10-year vehicle, well, not at least, but they're often 10 years vehicles. It could even be 12-year vehicles, and people subsequently raise multiple funds beyond and beyond and beyond. And so they say like you make your reputation on the hard ones, and then you make all of your profits and carry on like the good ones. But you need the good reputation to get all the good investments and get good investments in. By the way, I feel like I should pause. I've been talking and jamming for a while. Is that like, I don't know, should I pause for a second, Julia, and maybe like see if people have questions now? I mean, I can keep going, of course, but
Up to you guys. Everyone just keep the Q&A should be open. I know it's been hit and miss at times. We've had kind of some dodgy Q&A days, but if you've got any questions, either put it in the Q&A box or type the message in, or as Fred did last week, Farouk has the power to invite you guys up to ask a question out loud if you want as well. So you could also just raise your hand.
Oh, I for sure gonna do that, because honestly, right now all I see is a list of names like
Okay.
Andrew Robinson, Dennis. Like, who's Dennis? I wonder what Dennis is like. I don't wonder if he has a face, you know. So
yeah,
anyway,
if you've got any questions, comments, requests, areas to repeat, just like stick your hand up, and we'll invite you up to
cool.
come and chat.
I
have a question while everyone else formulates what they want to ask, which is, so you're talking a lot about how you initially figure out the kind of portfolio support that you want to provide to your founders during the fundraise and during the initial due diligence process. Sure. How much of that comes up with the founder during that process, and how much do you ever just pick up on something during the fund reference and just leave it till later, or do you talk about it at the time?
Super great question. It's such a delicate dance. It's like a waltz, because also realize like you know, maybe you've known this person or a team for like 2 weeks, and like the round still isn't together, right? And so even though you committed to it, like it's not inked, it's not in the bag, and so you have to just like be completely honest, respectful, kind, all at the same time. And so the founder can go listening first, I think is one of the best tools in life, for sure, like for everything, for relationships, love, marriage, whatever. And I'm not married, so I can't really speak from experience, but that's what I believe to be true. What the founder needs in like fundraising, I actually often ask them that question. I'll actually say like, hey, like if there was a third co-founder on your team page that would like perfectly run out the team and make it a dream and do the things that you didn't want to do and just like be perfect, like what do they look like? Where are they from? How much years of experience? And then also I'll ask kind of like crazy, weird questions in diligence, like in really random order just to throw people off. I'll say like, what would make you quit on this? And then like, because fundamentally you're creating like a profile of a person in your head based on like different little mini micro interactions that you have. And so like sometimes they'll explicitly say like, hey, I really need like this type of person, and because we can't hire this type of person right now, like I would really appreciate your help in getting people from Datadog, or getting people from Facebook in the syndicate, specifically a product manager who worked on the Messenger platform and payments, or the blockchain thing that they're working on, or whatever it is. Sometimes it's that explicit. A lot of times though, actually more often than not, I would say the majority of the time, like you discern like, yeah, like, and again, forgive me, Julia, for using your name so many times, but I was just like, okay, like Julia needs Y, like, okay, cool. Also, she might not know that she needs Y. How do I get to show her that she needs Y? Who can I introduce her to that she's excited to talk to, which will unearth that type of thing, even from so also some of the best messages in life, I think, are received when there's like a deeply respectful relationship and like honest. But look, I'll you know, again, I know my ego. I just met Julia 10 days ago, and it's so clear and obvious to me that she needs help with technical architecture. I can tell her that, but hey, she's been doing this job for 10 years. Like this dude she just met, from, this Yank, who you met from, like just days ago. What is he saying? Like, I don't like that. Like, why do I want to work with this? Like that was abrasive. So what I would do is like, okay, cool. I'm gonna go introduce her to this person, and then I'll actually talk to that person on the side and be like, hey, look, like I want you to keep an open mind, but like here's my observation of Julia. Like I'd love for you to sort of press on that. And honestly, like I hope you guys get along. I'm leaning forward, but I kind of want I want her to get there more because I want her to be happy and her success. And then yeah, and then the thing is unearthed. And then you kind of let people get to that conclusion themselves. I know there's a lot of really funny like movies about this and like with marriages when when you give someone the idea and they're like honey, like we should totally go and see like your mother-in-law this weekend. Like, oh, you really want to do that? Sure, let's do it. So yeah, does that answer your question?
I guess, yeah, it's kind of like if you've ever seen My Big Fat Greek Wedding, the quote with the guy is like, the man's the head of the house and the woman is the neck. So sometimes you just need to be the neck and turn the head any way you like.
Exactly. Great reference. I
Best
love that
film.
film so much.
Best film.
Yeah. The second one wasn't as good though. I was a little disappointed.
If it had to be. It was so many years later. It was never going to work. But
yeah.
Comments on Big Fat Greek Wedding below. Please be aware I am Greek and it's basically a documentary of my own family. But another question I had, which is something that's been a running theme throughout and probably just a bit pertinent for some of the people watching, is we've had this kind of running theme throughout of knowing what your added value is or superpower is that you can bring to the table as an investor, especially
Amen.
for your portfolio companies. What would you say your superpower is? You've been talking a lot about kind of helping with fundraising and kind of strategizing on that. But what would do you think that's your superpower? If not, what else do you think it is? And how did you find it? And how would you recommend that early stage VCs kind of figure out what that is and build on it, especially when they're first helping with portfolio companies?
Great question. By the way, I'm just like plugging in my computer. I just want to make sure it doesn't die. So that's good. Give me 1 second. Oh, this actually is gonna work. Whatever, we'll be fine. What was the superpower? And how did I? Well, first, I mean, as various as there are human beings on the planet, there's a variety of ways of helping people. So for me, I think for sure, like to be perfectly honest, there's different mentalities for this. I mean, there's like the Sam Altman like Y Combinator point of view that like he's like most investors are actually like adverse, like they actually hurt the company, they're like negative, they like get out of my way and just like do the things that you say you're going to do. That is the minimum. That is the minimum that one should do. For me, what was interesting is I kept having founders, maybe it's something about my personality. Maybe it's something about my personality. Maybe it's something about like who I am or my personal experience, but oftentimes anything oriented towards fundraising, like no matter even on the cap table, if it's like, IVP, Sequoia, Greylock, whoever it is, like I'm non-threatening enough and knowledgeable enough. I've been doing this for 15 years where I've worked with pretty much everyone. And I don't have any like ulterior motives or weird incentives because I'm a seed investor and I'm not going to put a large check in the follow-on financing round. All I want to do is for them to be like happy. And so, yeah, like everything from pitch review to deck review to which investors they should work with and why, and then like back channeling to make sure it gets done and to ensure that that process is not like difficult or arduous for founders is important. And that's a thing that's actually like there's so many components to why I do that well. And I think the kind of subtle secret though is referenceability from other investors. And so if I introduce someone to someone at like Sequoia or Greylock or Andreessen or whatever, like their prioritization and their already positive bias on meeting the founder is literally the laziest thing I can do. But it was hard won because there's like a 12-year history of investing in companies, and 4 of them went public from seed, and a handful of them were bought for a couple $100 million. And generally, like having a reputation for being like a good guy in a way. and not just a good guy, but like good at his job, at least in my situation. So that's for sure one piece of it. Second piece is I really, again, it's like how you invest is almost like how you sort of see the world. I think people people operate the best when they have a calm mind, and then they also get diverse opinions. Hello, diversity DC. Get diverse opinions like early on that are outside of their network. And so, very specifically, when I the ideal preface founder is someone who built something internally at a big company, had a startup exit before, built something internally at a big company as a VP of product or VP of engineering, a proprietary solution, maybe like they built an anti-fraud solution at TransferWise, or maybe they built some like supplier procurement thing at Amazon. I will be the first check when they spin out, and I almost even convince them to leave, or I'll give them money to leave. That's sort of my thing. And what's critical is those types of founding teams. They have so much good about them. I mean, they're going to spend less money on R&D because they built it before at a bigger company. They're going to be able to hire a bunch of people because they know a bunch of people from the former organizations. And they're going to be able to have a bunch of customers because their peers are their friends. But introducing customers that are not just like classic like YC startup, or like high growth kind of cloud tech companies, and actually introducing one of my founders to, I don't know, like the CTO of Salesforce, which is actually kind of an old company at this point, or maybe it's introducing it to the CTO of Reckitt Beckensur or Harrods, or if it's a retail business, or so that those in-depth relationships come from just being a good guy. Sometimes it's like almost financial, where like they're LPs in my fund, and then I will introduce those customers to my portfolio founder really, really early, and their product thinking will change. And this is why I like seed investing so much, because like the introductions and the people that you put around the table like can wildly change the trajectory of the entire organization, but also like the product, like what it does, like an idea that you have, or an idea that was generated by the introduction that you made to Julia. Now her product is completely different, and it's actually like maybe it's tangential, maybe it's tangentially different or whatever, but it's different. So yeah, it's a really good question. Another superpower is knowing what you're bad at. What was it? What was the Socrates quote? Like, I'm the smartest man in the world because I know what I don't know. You got to know what you don't know, and actually, like that's a good secret. Is there are things that you'll be asked for, or like you'll need help with, and just in the same way of like like the power of saying no is really important. Like, nope, I honestly can't do that. Like, it's not my thing. But rerouting that request to someone better or well suited, and like knowing how good you are at certain things is critical. So actually, that'd be my superpower is like knowing what I'm sufficient at. That's the most important one. Knowing what I'm sufficient at and like excellent at, and knowing what I should give to someone else.
Okay, cool. So I guess the short answer to that for how do you develop it is just time. Just
Yes.
put in the hours.
Yeah, no, yeah. Put in the hours, but put in the hours. Yeah, I don't know. I'm trying to think like if there's any shortcuts to it. I mean, it's self-awareness. So like examine like what kind of friend you are, what kind of like partner you are, what kind of classmate you are, what kind of student you are, and like there are going to be patterns in what you shined at, and like what makes you special as a person, and like that special needs to be like very pronounced, and like the world should know, and like and you should help your portfolio companies, because like you can be a game changer. You can be a true game changer in someone's life and livelihood. So um yeah, it's but there is a way. So you could just ask. So after you've worked with the founder, or after you've worked with the team, I mean, some people are actually really programmatic about this. So like Andreessen does like founder surveys, and like that people collect NPS scores in the same way that you collect an NPS score for your customers. What could we do more? What could we do less? Whatever. And like you'll start hearing it. And then it was interesting actually from my former firms when I captured that feedback. It was very consistent with what I just shared with you guys with that. So yeah, it's pretty cool. Pretty cool that like that all lined up.
Okay, great. We've got a couple of questions here, both from
Cool.
Bola.
Where are they?
Oh, they're out down in the Q&A box at the very bottom. So
Oh Jesus, sorry. What if a founder disagrees with the? Oh, actually, you know what? Would you mind, Bola? Can I see your face and I want to hear you? Let's see. Let me see here. Allowed to talk.
Hello, can you hear me?
I can.
Okay, 1 second. Just see if you can see me as well. Oh, I don't think I can switch on my video.
Yeah, I don't know why that is. I've tried changing it and Zoom really freaked out and hated it. So we're just going to stick with this for now.
It's all good, man. I know your voice now. That's at least something, right?
Cool. Yeah, so I guess since I don't know, can I do both questions or should you just start with one first and then maybe give someone else a turn?
Well, whatever way you want, but I'd say start with one first is probably the best thing.
All right, cool. So my question is, what if a founder disagrees with the help that you're suggesting? So for example, you can see something that it's potentially glaringly wrong in their business, but they disagree. But at the same time, because it's their business and they've been doing it for a long time, they should have more context than you. However, you still can't help but see that flaw in your business. How do you handle that?
Well, if they disagree, well, they're clearly wrong, right? I'm just kidding. Just kidding. Okay, so it's a really good question. The thing that is important is leveraging data and leveraging parallels. So if a founder disagrees with the help that you're suggesting, like, hey, I really think you need X, and they're like, you know what, honestly, like, I think you're off base. I'm like, okay, tell me why. You owe me that. Like, I wouldn't say you owe me that, but like, tell me why. I'd love to learn more, like why you think that's not helpful or useful. And look, maybe their instincts are right, but something they talked about just by opening up that vulnerability, you'll actually learn something else. But you have to be data driven and stuff. You have to be data driven in everything. And oftentimes, like, founders have such like a hard job, right? Like it's emotional, it's stressful, it's anxiety ridden. And oftentimes people's point of view, particularly if it's their first time and or maybe it's, I don't know, every day is day one. I guess every day is like new and you have to like learn more. But if it's their first time being a founder, there are gonna be so many things that they're just not even aware that they're wrong about, or they could be wrong about. And so I'm a big Socratic method person. So just keep on asking questions, keep on asking questions, keep on asking questions, and eventually like they'll teach themselves. But I would rely on the connectivity to an expert. So let's say they disagree. Like, people who are with their senior or junior or whatever, like, people can disagree with people and it's fine, but there are times, and I think in more emotionally driven situations, and I think like, starting companies and building companies can be very emotional. You have to find like a third party or find someone, be like, hey, like, okay, well, as a favor to me, like, would you mind actually chatting with someone who I think is like really, really good at this function, and like, just go learn from them for 20 minutes? And they'll say like, sure, of course, I'll do a 20-minute phone call with, the founder of Cisco, on how they built like culture early on or whatever. And then eventually you just if you believe you're right, you let the information come to be. And look, if you end up being wrong, that's okay. Like, it's actually okay. Like, it's just an idea, and it's an open space. And if the founder believes that like you're wanting to help them and that you're aligned, they're gonna see it as such and be like, okay, cool. Like, we had an idea that just didn't work. All good. Does that help, Bola? Hopefully.
Yeah, thank you. That's super helpful.
Cool. And then question number 2.
I guess how do you manage your time effectively to ensure that? So I guess across in 2 scenarios. One, you are providing portfolio support to your portfolio versus sourcing, and secondly, even in terms of providing too much portfolio support to one company and then not having enough bandwidth to help the others?
Yep, sure. Yeah, that sounds good. Okay, time management is the most difficult and most challenging part of this job, for sure, for sure, for sure. By the way, like venture capitalists, think broadly live like really wonderful lifestyles. Like they're compensated well. They get to like learn from interesting people. They have like interesting access to events and this and that, whatever, and like the opportunity to like like there's a lot of goodness that comes from this career and this job, but like, man, it can be really time. Like it feels like your brain is like stretching literally, because in the past 3 days, someone asked me like, hey, like I need a designer. Like I need a designer. Like, okay, cool. Like let me try to do that. I have like a to-do list that's so long. Or maybe it's someone needs help with like pitch help, or someone needs a customer introduction, or look, I would say right now, this is fun too. I would say 60, it depends actually like when you're investing too, right? So before you actually have like I still have to write 6 more checks in fund 2 to finish it. And so I'm still oriented on sourcing, and you kind of never stop. But like it's not just, by the way, it's not just portfolio and sourcing, it's also like fundraising. So I have to raise fund 3 pretty soon. Yeah, I would say right now it feels like it's like 60% portfolio, 30% sourcing, 10% like admin, other, helping my teammates. I mean, there's a couple of people who work with me, and fundraising prep. Yeah, you gotta use, like, I go back to what I said earlier, Bola, just saying no. Just saying no when you can't do something, and don't set like the most annoying thing in life. I shouldn't say that. One of the most annoying things to me in life is when people say that they're going to do something and they don't do it. It's quite frustrating, right? You can avert that outcome for yourself if you just you can avert that outcome for yourself if you just say no to something. Or be like, oh, like honestly, I'm not best suited to do that. It's the hardest part of the job. Like that's an excellent question, and like, man, if you have a better answer for me in a couple of years, once you're like running, like the biggest VC fund that's the most successful in the world, Bola, and you tell me and be like, well, Farouk, I figured it out. Like, here's the secret. It's hard. I don't have the best answer for you, but it's like waves. There'll be. I guess maybe on Fridays I actually have like a block in my calendar that just literally says like help portfolio, and like for sure I book over it sometimes, but I'll basically try to remember, and then I also count how many customer introductions and HR introductions I've made to each company, and I'm on a text base with like any of my portfolio companies. The hardest part comes to be is when you start having lots of companies. I have 60 right now that I've invested in my career. I'm probably actively involved with 25 of them. And yeah, it's they cycle out, right? So a couple of them, they'll go public, they'll shut down or whatever, but you just you have to just start hiring more people. That's what I think the answer is, because time is limited.
Thank you so much. I know that was I wasn't looking for a perfect answer. I just wanted to see like practically how you did it. Really helpful.
Oh yeah.
So much.
Oh yeah. Maybe one last quick thing on sourcing. I built an algorithm to source companies for me, so that helps. Like yeah. Cool. So Simon, you had a question. Let's see. I don't know how best to do this again. I like this allow to talk thing. Maybe now I can do disable talking to Bola. Cool. Sweet, that worked. Simon, let me find you. Nice. I like your last name. I like to hear you pronounce it. There you are. And I like your mask. Cool, dude. All right.
Yeah. Hi, Farouk. So yeah, what like you are in SF, which is kind of the epicenter of tech, and a lot of the support you mentioned was connecting kind of the founder to C-level executives. of tech companies, other VCing, to engineers, you know, who have been there, done that. So like how much of your success in your career do you attribute to kind of being in SF, and how do you think you could replicate a similar thing outside of SF?
Also, great question. So going to San Francisco and being from there, well, so look, in my career, I actually only lived in San Francisco cumulatively for 5 years. I currently, like, this is a fake background. I live between Los Angeles and New York. But going there and being there and cultivating relationships with other firms, like founders, limited partners, like execs at tech companies. The reason why it's so good to be there is like there's such a density of alumni, right? Like there's so many people who help other people. What percent? I mean, so the first company that went public was actually you sound German, Simon.
Yeah.
First company I invested in
Correct.
that went public was German. Wasn't even American. Wasn't even like a super high tech company. It was Virkhoff and then Auto One. And actually that one I even did when I was like partially in San Francisco. Funny enough, but I think it was one of the most important professional decisions that I ever made, and the reason is for the density. And so, how much do I attribute? Like, man, like 60%, 70% maybe of that, and then you just the people also. I mean, again, I think every geography has like pros and cons, and I think there's opportunities like all over the world, and there's really interesting opportunities in LATAM for different reasons. There's really interesting opportunities in Europe for different reasons. So how to kind of cultivate and build that network? The thing is, you just have to start. So whatever geography you're in. So let's say that you're in Munich. You should go and kind of like get to know all the best engineers and product leaders and like middle stops generally, or go talk to founders or local venture capitalists and like try to like be helpful to them and just learn from them and just like give without like any expectation of getting something back. And like what I have, people have equivalents of that in different geographies for sure. I mean, people have that I know people who I really respect who are like peers of mine that are in Europe who are just like incredible, and like they did not go to San Francisco. They just like hustled in their own way. But having a network of people that trust you, believe in you, would take money from you, think you're intelligent, like know what you're doing, even also like actually have like recency of what you're up to, like that is actually like a lot of the success in VC, because you can think differently, you can source different companies, you can come to interesting decisions, but like it's sort of a social community sport, and you work with other people, and your portfolio companies need other people, and so you have to like have that love. You know what I mean?
Yeah.
Okay, cool. You didn't pronounce your last name. How do you pronounce it?
Oh, in German it would be Ansorge. In English I always say Ansorge, but yeah.
Cool. There we go. It was different from what I expected. Good question. Thank you.
Yeah, cool. Thank you.
Cool. I will go and disable your talking. Awesome. Yeah, I'm trying to think of other. I mean, we've covered a lot today, right? On like how to help portfolio companies, and the crazy thing is like my way of doing it is wildly different from other ways of doing it for other people. And so you just have to find your own way, and just like avoid being a BSer. Like that's kind of critical. And then you cultivate kind of a reputation for being known for certain things, and like people now know in the industry like what kind of companies I invest in, how do I help the said portfolio companies, like where am I best suited, where am I least suited, and in being consistent about what you do and what you sort of get best at, like you actually, the right things find you, the right founders find you, the right questions, right? Requests for help find you really appropriately. So yeah, that's like my overarching kind of like guidance I would give to the group. And also I always like end these panels like this way. There are no rules. There are no rules. You can do anything you want in life, and like, you know, you don't need to be this. You don't need to be that. You could come from any kind of background. You can, you know, be an American who grew up in Chicago, who studied sciences, who decided to go to London to help his sister with his nieces and nephews and her children, and like go work at a VC firm there and like figure it out, and like, oh, then meet this type of founder and help them or with this problem, and then go and invest in this company, and then go invest in this geography. Like, there are no rules. And the people who are successful today, you know, let's hope they're successful for a long time, but they were not going to be the same people who are wildly successful in the future. And how you help portfolio companies and how you support them, it is one of, maybe not the most. So maybe like to sort of to negate some of the things I said earlier, if you ask limited partners, they'll say 80% of the value you deliver as a VC to an LP is sourcing and picking. But again, it's a funnel. And if you source and pick well and help the portfolio companies well, they're more likely to improve and do well. And then the founders and the teams and the relationships that you build with these people, that will have like amazing effects on you and future portfolio company opportunities. And again, like I like one of my largest LPs came from the founder, like from that story I told you earlier. It's pretty cool, right? Like, I wouldn't have expected that. And that kind of good stuff can happen. So anyway, any other questions? I know we have maybe like 5-ish minutes left.
Tej, we're going to try and promote you to panelist and see if we can see your face if you are happy with that. But
let's do that. Okay.
Feel free to not do that if you.
No, all good. Let's do it.
Hello.
Hey, how are you?
Hey, let me just move the room so I can get a bit of light for my face. Let's see if this works.
Cool.
There we go. Perfect.
Hello.
Well,
is that Jordan? Is that Jordan on your shirt? All right.
Yes, it is. So I bought it from New York.
I'm from Chicago. I grew up there. I went to probably 50 Bulls games in my life. I'm a big Jordan fan.
Good stuff. Good stuff. With the right t-shirt to wear then.
Yeah, man. Yeah.
So a quick question. I'm working with kind of a few companies looking to raise startup capital. So I'm not on the VC side of things. I'm more on the advisory team. But a lot of the companies that I'm working with are looking to raise kind of outside the borders. So they're based in the UK or in Europe and looking to expand across into the States. Do you have any advice in terms of how to kind of grow my network in the States without kind of being there?
Yeah. Okay. So I'll give you one comment first. I often find that people who are local in geographies that are less mature, even the UK, I know like it's probably one of the more mature geographies in venture in Europe. It's still like relative to the outcomes in China and the United States and stuff. It's like it's still behind in many ways. So oftentimes portfolio companies will be like, man, these UK investors are so conservative and like they don't believe in anything, and they want me to come back when I have traction. Like, I know my American counterpart competitor has like nothing. They had the worst product in the world, and they were able to raise like $7 million like from seed. Like, that's unbelievable to me. You have to like so I'm gonna answer a question maybe you didn't ask. Is having like a UK team being invested in by a US company, like that on the surface seems like a win, right? Like, oh, cool, like so and so West Coast firm like led my seed round. Actually, that might not be the case. Look, time zones are rough. I invest in, you know what's crazy with all this COVID stuff? I don't even invest in geographies. I invest in time zones, just so I can be like relevant. I invest in like LATAM a lot now. Mexico, like US, Canada, like all over. So that's one comment that I'll make, not to answer your actual question.
Sure.
Okay, you know, well, there's a person who I actually like, I kind of mentor in some ways, but I think he's already outgrown me, and I'm glad about it. His name is Pietro. He's at Stride Ventures. So Pietro is this like really friendly, wonderful Italian dude who basically just like super kind and wanted to start angel investing. Haven't really done it yet. I think he did some like internship at like not a great firm. I don't know. Sorry, this is recorded. But like he did an internship at a place that was like suboptimal for him. I'll say that. And then he did the coolest thing. He created a crazy market map of like no code, low code collaboration workflow tools.
Wow.
And then he published it on Twitter, and then on LinkedIn and Medium, and he got like, and now he got so much like love, and so many people retweeted it and tweeted it, whatever. And so he had a content approach for it.
Yeah.
And through that, like he's tight with like Gokul from Square. He's tight with like people at Andreessen. He's tight with people at like all like these really interesting funds, and these are people I've known for like years. I'm like, oh cool, like, you know, Pietro. Oh yeah, we love Pietro. He's awesome. And then all became from like him just creating a content piece.
Sure.
I think like, how do you do it? I mean, like getting an introduction from someone of your network to, and like, say there's a firm you really like, and these things have to be authentic, right? Like you have to be. And here's a wonderful thing about British people. You sound British. Some of the most politest people in the world, right? Like you guys are great. Like you can like, you'll go and have like a wonderful chat with someone and like enjoy and talk about who you are and where you're from and what you want to do. You have to like have a very like well researched mind if you're going to go talk to any firm anywhere, any person, whether US or Europe. But like, say if it's a US firm, be like, hey, look, like I love your portfolio, and like actually I want to chat with you because I saw you love this investment. You know, why didn't you do this investment? Or why did you really believe in it? Because like when I looked at the team, you know, between us, like I thought it was, you know, not that good.
Yeah.
Like having that, like, if that is your authentic point of view, sharing it and like facilitating some conversations and feedback, and like, because people want to engage with people wherever they are, whatever border they are, if there's like, you know, Socratic intellectual debate, respect for one another, and like how like they'll learn from you too, right? Yeah, it takes time, but like there are people who are like wildly good at this. I mean, like Harry Stebbings was the best version of actually example I gave you with the podcast. But like Pietro, who actually worked at Stride, coincidentally, like maybe he got the idea from him.
Yeah.
But yeah, it's a slow game, and also too, you know, you want to go slow. Like you actually, it's easy to be like, hey, like I want to have all these people in my Rolodex, and I want to have all these people like there. Maybe you don't want to associate with those people. Maybe actually this person who's like really famous on Twitter and like some cool kid SF Bay Area person actually sucks and has a terrible reputation. So like don't spoil your waters by like, you know, dealing with riffraff, you know.
Absolutely. And I think the best relationships aren't always just immediate. They take time, and because it takes time to get to know someone. So I definitely see your point in that.
Yep.
Perfect.
Yeah. Cool.
Well, thank you very much for that.
Yeah, no, good shirt, man. Anytime.
Cheers.
All right.
Okay, thanks so much. I know you've got a hard stop in like 1 minute, so I just want to say thanks so much for joining, Farouk, and for answering all questions and sharing your insights and knowledge. If people want to get hold of you after this, if they have any further questions, if something occurs to them just after we finish, or if anyone's recording, what's the best way for them to do that?
Yeah, sure. Email is
watching the recording, not recording the recording.
Yeah. Yeah, it's Inception, a dream within a dream. Farouk@prefaceventures.com is a good way to get in touch with me. I don't respond to Twitter DMs ever, but you can feel free to follow, feel free to connect on LinkedIn. I'm accessible. It might take me some time, but like WhatsApp too, you know, like that's usually what I do. If someone emails me, I'll basically be like, hey, hit me up on WhatsApp, and then just like chat me your question, which is more efficient. I'll leave like a voice memo. But look, like you guys are, if you're in this cohort, you're doing the right thing. It's really wonderful. If you believe in venture as a job, like, which I think is one of the best jobs ever and really fulfilling, please, keep going and take all the value you can get from this. And thanks again, Julia, for putting this all together. Oh, so my email, Farouk, my first name, Farooq, and the fund name is Preface Ventures, or a British person would say Preface. So it's Farouk at prefaceventures.com. Sounds good?
We'll put it in Notion as well, so you'll be able to find it.
Yeah.
Thanks so
All
much.
right.
And I'll let you go now, but thank you everyone for joining, and have a good evening.
Cheers. Bye-bye.
Bye.